Oh man, so in this video we're going to be answering the question which I'm probably getting asked the most right now, which is, am I bullish or bearish on this market? I've been making a lot of videos where 1 minute I'm sharing with you a trade to the upside, and then the other minute I'm saying, oh, we could be heading to lower lows. I'm going to be clarifying exactly, to clear the record, exactly what is going on. And the first thing we need to understand is this is not binary. We need to be grown-ups. There's too much whining going on right now in this bear market, and we need to face the reality that there is nuance in the discussion. There are moments where on a certain time frame you could be having a relief rally which could explode Bitcoin, right, up to 26,000, which I've been saying. Equally, we need to understand what is the macro view, what is the medium term view. I'm going to try to put the record straight for you guys in this video with on-chain metrics, also some technical analysis, so make sure you stay tuned till the very end. Smash up the like button, don't forget to subscribe. As always, you can check out BitGet, links in the description, if you're looking for an exchange with no KYC, no VPN needed, super easy to use, and you're going to get 10% cash back as soon as you deposit. Right. Head and shoulders pattern. This is where we've left things off pretty much. And as you can see, we're close to seeing this pattern invalidated. Some people are calling it prematurely, but here on this short-term pattern, we're seeing this coming to a curling close. So what you can see now is you're getting this curling action. Now remember, it's not completely invalidated until you actually close below the neckline, okay? So formally, it's not done until you close below the neckline. Just want to remind you of that, because what you can get is you can get this to take everybody out of the trade, and then it will rebounce, and it's called a retest of the neckline of the inverse head and shoulders pattern. Okay, so you do need to close below the neckline, but what you can see is volume is starting to take us to the downside. You can see we've created lower highs, high, a lower high, a lower high, and you're getting lower lows as well. So this is a downtrend now, which definitely means we're heading towards the neckline. But the question is, once we get to the neckline, once we get to about 20,000, will we lose the 20,000 mark? And when we then head lower to test the bottom of this head pattern. Now, if we do start doing that, I can see a new pattern which we're forming, which is referred to as an Adam and Eve pattern. Okay, so I'm going to show you this pattern right now. Let's remove this head and shoulders, and what we'll see is, if that happens, you can see a neckline across this green line here. So take that as your neckline at about 20,000, and what you can see is this is your Adam. It bounces off the neckline, and you create what's called an Eve, which is a curved pattern. Now what happens when you do this is you can get a breakout to the downside with a measured move of this. If I put that at the point of breakout, this could be taking you towards the 18,000 mark from a technical perspective. Now, for those of you who want to look into this a little bit more, you could research Adam and Eve pattern, and that's the exact pattern we're forming. You create your sharp Adam and then a curved Eve, and then you fall down. You may get a retest of the neckline before further moves down to the downside. Now, that short term actually marries up with some of the longer term price points I'm seeing and what I'm seeing from the on-chain metrics. But this head and shoulders, and I reiterate that, can still break to the upside, because if I show you from the daily pattern, this is not just hopium, but I'm just showing you that it's possible. Because let's get a clean chart. If I show you this pattern here, I show you this, and I bring out the EMA ribbon, you can see that even if we run up to 26,000, which was the target of the head and shoulders pattern, that brings you here. Right? And even from there, you're not bullish on your daily at all. It's just a relief rally. Macro, we're still long. So on the short-term time frame, yes, there is room for Bitcoin to run up to 27,000. Does that mean we're going to now enter into our next run up to our next bull market? Absolutely not. And that is because the macro conditions have not resolved themselves. I mean, to put this into perspective, inflation is still at record highs. We are at this critical inflection point in the economy now, where actual spending and economic activity are still positive. But there is a slowing down in consumer confidence, and the financial conditions are starting to tightening, because we've seen the increase in interest rates. We've seen the Fed now starting their quantitative tightening. So we're either going to head into a prolonged recession and really pummel ourselves into recession, or we're going to escape by the bear, by our, skin of our teeth, right? And what I want to show you is this. This was an interesting piece of work done by Ecoin Metrics, really good piece of work. They do some great data visualization as well. And what I liked about this is you can see the different colors. Now, blue, let's focus on blue, which is the S&P first. We are here. This is the current retracement we've had. Now, it's important to know on this axis here, which is your y-axis, we've got the size of the drawdown, okay? How far are we from all-time highs? 20%, 40%, 60%, 80, 100%. And then you've got the duration of the drawdown along the right-hand side. It's important to know this is a log scale. So it becomes harder and harder for this to go to the right-hand side. So it shows you how crazy these moves here. Let me just pop me let me turn this picture-in-picture off so you guys can see clearly. So this is a log scale. So these are really, really deep depressions, right? With the greatest depression here in 1929. So we're here right now, okay? We can feel it right now. We've got a deep drawdown past 20%. We're officially in a bear market territory. But are we now going to start heading towards Black Monday, Nixon recession? I mean, these are huge, huge crashes, right? What's the evidence behind that? Or are we going to come in towards even this, which is all deep recessions here? Okay, so you can see that you've got a long way to go. You're still another 10% drawdown or so away from the COVID crash. The difference, however, is the COVID crash was followed by unprecedented printing, okay? So the COVID crash was followed by unprecedented printing, whereas we're in the opposite environment right now. We're getting quantitative tightening. Money is being pulled out of the system, and inflation is trying to be brought down through increases in interest rates. We can't compare it to the COVID crash. Now, if we look at Bitcoin, Bitcoin is the orange dots. Now, if you look at the crashes Bitcoin's had, these were the last two extreme bear markets. And these are not comparable to where we are at right now. And this is what gets me slightly worried. Because for those of you who weren't around in a bear market, the bear markets are horrible. These are over 1,000-day long. We've just passed maybe, we're nowhere near 1,000 days, right? You can see here, we're closer to the 100 mark here on the log scale than we are anywhere near 100 days. So November 2021, we hit our all-time high of 69,000. So we're not even a year into this retracement, right? So we're nowhere near 1,000 days is what I'm trying to say. So this bear market lasts well into 2 years and 3 years onwards. So you've got some room there. Also, what gets you a little bit worried is when you look at Ethereum. The same thing for Ethereum, right? Ethereum's not near its first ETH bear market in 2018. So that's got plenty of way to go down. Not necessarily in terms of price, but in terms of the length. And that's what's important. The bear market is not just about how far we go down, because I'm going to show you about how far we can come down from all-time highs, and we've already come a long way. But it's about how long do you stay here. So a lot of these people that are selling you dreams that we're just going to fly straight back to the upside, I'm a bit conscious about that. If I hear that, I'm kind of just going, I'm a bit skeptical about that, because what we've seen from previous bear markets is we move horizontal for quite a while as well. They're very prolonged. They take a long time. People fall out of love with crypto. They leave, the tourists leave, and then Bitcoin goes on its spike when everybody's forgotten about it. So have we lost that characteristic? Is that what those people are saying? Okay, so that was the first piece of data I wanted to share with you. Now, the other piece I wanted to share with you was this, and we've seen this a couple of times now. I shared this with you guys. And what I'm showing you here are the retracements we've seen from all-time highs and the length. So if we take the 2015 bear floor, you fell a maximum of 83.8%, and the duration of the fall was more than 410 days. The 2018 bear market took you as low as 84%, okay? 84% where my cursor is here, and it lasted 362 days. This was the COVID crash, fell as low as 74%. Again, I wouldn't compare to this one. It's not a normal bear market. And then we have the 2002 bear market to date, which has now fallen 73% and has only lasted 227 days. Now, some people will argue it's okay. We're heading into a super cycle. You know, we don't need to fall as deep, and we don't need to be in this bear market for as long. Well, maybe that's the case, right? We did have a shortening of 410 days to 360. Maybe we could have a shortening now. But I just feel like there's a little bit more to go. I'm going to show you a few more indicators which tell you why I feel this way. Now, it's important for me before I go into this chart to just reiterate that everything is different based on your circumstances. It's easy for me to say I want to prepare for lower lows, because at the end of the day, I'm still in the market. I never sold any of my positions, and I'm still continuing to dollar cost average in on Bitcoin and Ethereum, albeit not on altcoins. Now, if you're not in the market, you know, waiting for this to go lower could be a double-edged sword. So I'm saying this based on my position, which is I'm already in the market, have been in the market for a long time, rode down to some of these lows, comfortable, good conviction, no need to panic sell, and I'm accumulating and waiting for the next run to the upside. If you're not in the market and you're waiting for this potentially to go lower based on the data I'm sharing with you, maybe it will go lower, but if it rotates the other way, you're going to panic. That is why I always advise people in our course member live streams. You guys can join to ijaz.uk/member. We do 3 times weekly live streams together. I always remind everybody that what I do is I nibble. I nibble even now, even though I think it may go lower, I nibble now. So that way, if Bitcoin rotates and decides to go all the way up to 69,000, I don't have any regret. I nibbled. But at the same time, I keep dry powder on the side that if we do fall to lows, if we go to retest 17,600 again, I'm prepared as well. Very, very important nuance there. If you're not in the market and you're just waiting for lower lows because some YouTuber told you, maybe that won't come. And the reality is no YouTuber knows. We just have to do the analysis like I'm doing now as best as possible and take the data as and when it comes. Right. So let's get back into this. And let's take this off. And what you can see here is there's a bunch of different indicators here. There's actually 5 which Glassnode have kindly put on this chart for us. And I want to walk you through them. The first one is something I referred to a little while ago, which is the Maya multiple. So the Maya multiple is the difference basically between the 200-day moving average, okay, and the price. So what you can see is when you're at a 0.6 Maya multiple line, this would mean a 40% discount to the 200-day moving average. So we can see here that's the first line of defense normally, okay? And that line of defense currently is sitting at $23,000 roughly on Bitcoin. Your next line of defense is the orange line. Now, this orange line is the realized price for Bitcoin, okay? Now, the realized price is the aggregated cost basis for everybody who holds Bitcoin. That's the orange line there. Your blue line, which is your next level of support, is the 200-week moving average. Remember, we've always bounced from this 200-week moving average. We've only closed below it once in the previous bear, but we recovered quickly, during COVID, but quickly the next weekly candle was green thereafter. This time, we've got our third weekly candle now under our 200-week moving average. We then have the green line, which is something called a balance price. That's currently sitting at 17,900, which is really close to the lows we just experienced. And that accounts for the destruction of coin days and reflects a market price that matches the value paid for coins minus the value ultimately realized. Okay, now just 3% of all trading days ever have fallen below this green line. So you would have seen some people sharing this on Twitter and on YouTube. This is a really important level of support, this green line here, which is called the balance price. Finally, the last level of support is the purple one. And this is the one which has always been the ultimate level of support since the start of time on crypto, right? This one has always held up well, and this is called your delta price. And it's currently sitting, without shocking you guys, without me saying, oh, it's definitely going to go there, it's sitting at 15,750. Okay, and this is the difference. It's calculated as the difference between the realized price, which is your orange line, and the time average price, okay? Now, again, this level has never been breached on a closing basis. We've never closed below this purple level. And guess what? We're coming towards it now. We're getting towards that 15,000, right? We touched at 17. So that is what is one of the reasons where it's getting me thinking, okay, could we have this last leg down before we see that? The other thing which was important, which I just want to mention, I don't have a graph to back this, but I did share a graph with you guys probably about a week or so ago where we saw that the average cost basis for a miner to mine Bitcoin was 17,600 as well. In other words, miners have not had any capitulation yet. And in previous bear markets, we have seen that. Miners have been fairly comfortable because it's not fallen below their cost price to produce a Bitcoin. So could we again have that value? Could we go below that for a little bit, get that capitulation before heading to the upside? That's something else that I'm looking at as well. Moving on, we can then see that the bear market accumulation continues to be in full force, right? We're seeing this accumulation happen. The dark circles here, the dark purple indicates people are buying. Now remember, there's 2 types of buying. You get the red circles, which is people buying in bull markets, right? The tourists come in, they're excited, and they buy. You then get your bear market buys, which is this, the November to December 2018 bear. You then saw your COVID bear. And then what we're seeing now, right, which was our fall post-November 2021, and then our fall now post-Lunar. These are people buying into the weakness, trying to buy the dip. Okay, so we're seeing that continue to pick up as well. This one's an important one. This is called the reserve risk. Now, the reserve risk is also known as like hodler conviction. So think of it like the lower the reserve risk, the higher conviction hodlers have. Okay, now what we're seeing is hodling relative to price right now is really strong. We've not seen levels this low since the 2015 bear market. But again, look how long in 2015 it stayed this low. That's important. Even going into the 2019, look how long it stayed. It stayed for a while. We've only just wicked down here. So we could see some sideways activity here for a while at these prolonged prices. Okay, so something else for us to watch is the reserve risk. Moving on, we also have our entity adjusted dormancy flow. Now, so think of dormancy flow as how dormant are these coins, right? Are the coins moving or are they staying? Now, what's worrying me on this chart particularly, if I go over here, is this bit here. Now, what we saw is when dormancy came down, every time we've come down, we've had a blow off bottom. In other words, we come down, we capitulate, and then we go for our run. We come down, we capitulate, and off we go. We come down, we capitulate, off we go. Come down, capitulate, and off we go. Now, what has happened this time? We came down, we looked like we were done and we were going for another run up and everybody's feeling confident around this time, and then we got thrown back in, right? We got thrown back in, and now we've fallen off lower. These are at all-time lows right now, guys. This is crazy low on the dormancy flow, which is another worrying sign for me. What is going on here? Why is this showing such weakness on on-chain metrics, now going far below anywhere it was in the lifetime of Bitcoin? Next reason I'm seeing a little bit more kind of downside here is looking at the percent supply in profit. So when I look at the previous bear markets, you see that 40 to 45% of the supply would be in profit. Okay, so you can see here, you get down to these kind of levels. And now what we're seeing here is we're not quite there yet. Okay, you can still see a decent percentage supply of the wallets are still in profit. So you want to see this kind of come down to get this full capitulation in this kind of red zone, which is historically where we've seen things start to improve once we touch this red zone here in terms of supply in profit. Okay, very, very important. So that's it, guys. These are the on-chain metrics which I'm looking at. When I look at them, when I look at the macroeconomy, when I look at inflation at record highs, I can't help but to say, look, guys, I need to be prepared for more downside risk. Now, macro term, long term, am I bearish on Bitcoin? Absolutely not. I continue to hold Bitcoin. I continue to move funds into Bitcoin. I continue to dollar cost average and hodl. But what I'm saying is I don't suspect us running up to bull market highs straight away or even within 2022. To put things into perspective, I think it's going to take at least until September, October time before we see a meaningful change in inflation. And then after then, they've successively got to keep bringing inflation down all the way to 2-3%. That could take us easily into Q1, Q2 of 2023. Okay, so this, anybody who thinks this is, you know, a quick wick down and then we're going to go back up to 69,000, I just want to make sure that we're not missing the other side of the story, because those who have been around in bear markets know that they can feel like an eternity. But in that eternity is where we can build our wealth. In that eternity is where we can build our portfolios, we can build great projects, you can build your businesses, you can build whatever you're building around crypto, DeFi. Now is the time to hibernate and do that. When other people are not interested in crypto, when you're in a bear market, that is when you can get to work, go figure out your cash streams, bring more cash, invest in crypto. Not financial advice, but that's how I'm doing it right now. I'm trying to figure out how to get more cash into crypto, and the longer we're in a bear market, the better, right? Because it gives you more opportunity to accumulate Bitcoin at these crazy prices. So that's what I'm seeing right now in the charts, guys. We can only go as far as the data shows us. So we all need to be grown up. We don't need to be bitter. We don't need to be all like, oh, moody and, oh, why do you think it's going down? Why do you think it's going up? We're just doing our analysis to the best of our ability. And anybody who says they definitively know where we're going right now is an absolute liar. And you should consider whether you should be taking in that kind of information. Guys, don't forget to smash up the like button and subscribe if you appreciate this type of content. Let me know in the comments. Don't forget to check out BitGet. Links in the description. One of the best exchanges out there. No VPN, no KYC. You guys going to get 10% in cashback straight away, so definitely do check those guys out. Thanks for watching. Go watch this video, and I'll see you in the next one.